Good morning, everyone. How's it going? Hopefully you can all hear me okay. I was having a lot of technical troubles, so I just barely made it on time. It is November 9th. It's half an hour before the market opens, and I apologize for missing yesterday's after market session. My wife had some medical tests and they just kept dragging on and on and on. Well, for well longer than we anticipated. So thank you for bearing with me. Let's take a look at what's going on in the market. Thankfully, it's been very quiet lately, so I don't think we missed much in the aftermarket analysis. Let's take a quick look at futures. So we are up, but not significantly, not by much, about 0.2, 0.2% all across, except for NASDAQ is less than that, 0.1%. Really tiny bullish bias, but for the most part, just random and not giving us a whole lot of information. Bonds, flat, energies, tiny bit up. So really the entire market is flat. So let's take a look at what happened in the market yesterday, and then we'll see what we think for today. So you can barely see that yellow line right here. Yesterday, we did move higher. That's a red bar, but it's actually up 0.07%. So this 7-day up streak extended to 8 days, and we did get a red bar. So there's definitely more and more signs of this weakening and looking like it's peaking out. But for the most part, we call this sideways movement, consolidation between the MA50 and the MA90. A few things that give us pause, even lower volume than the past 2 days. So with very low volume, with low trading range, really it's really just consolidation. And we approached that MA90, but we did not touch it. Let me just get zoomed in over here. We're a little bit below that MA90. So today, with the futures looking like there's a slight upward bias, I'm going to, once again, just like yesterday, I'm going to be very aware of that MA90 right above us. And if we touch that MA90 and show weakness, I'm really going to start anticipating that the market is going to head downwards. So the longer we go with this upward streak, the less likely it is we're going to continue the upward streak. We might have a higher high, but at some point, unless we bust through that MA90 and go screaming higher, we are going to need to close lower. There's no other choice. There's no other possibility. There's low momentum in the market. You can see this is dying off. This went parabolically up, and then it's curving parabolically sideways. So consolidation or possibility of pullback, just like we talked about the day before yesterday, is very, very likely. Right now, if we hit that MA90, getting into position on some short-term, very, very short-term puts can be a good idea. Even if we just pull back to that MA50, that's still a quick win right there. So it could be a 1 or 2 day hold only. I wouldn't hold it much beyond that. So basically to the end of the week, because we don't know what's going to happen over the weekend. Or if we pull back all the way to the MA50 or 20, then we're going to anticipate a bounce and really start getting into position for some longs right here. So the other thing that gives us pause right here is nothing's really going on with the Fed. We have this economic calendar, but it's jobless claims, and it's been a very consistent number over the last year, really. Jerome Powell is speaking, but he didn't have an effect really much on the market yesterday. I doubt he's going to have an effect today, because what is he going to say that's different than yesterday? And there is nothing going on in bonds, at least in the futures of the bonds. So let's take a more careful look at that. Yeah, bond futures don't look like they're going anywhere. So let's look at TLT. So we went up, we did go above that MA50 yesterday, and the higher bonds move upwards, the less pressure there is on the market. So this is supporting our thesis that the markets can turn around, this equity markets can turn around and start moving higher. We've broken that downtrend. And as long as this chops sideways or moves higher, that gives us less upside pressure, or sorry, downside pressure on the markets. So that's giving us a lot more confidence that once we do get above that MA90, the markets can go and reach these new highs. But that MA90 is still going to be a challenge, because what is going to be at this point the catalyst for it to continue moving higher after this huge run up? What else do we have? We've got nothing on the economic calendar. We got nothing on Fed. The bonds aren't doing anything. Earnings seasons is just about over. So there's no really going to be this major catalysts that are going to move us above this, unless something crazy like suddenly there's peace in Ukraine and in the Middle East. That would temporarily spike us up, and then we'd probably pull down and then go higher. But other than that, there's nothing really here that allows us to keep on moving higher the way that we have been over the last 8 trading sessions. So there's just a really strong case that is just getting stronger that we're going to pause right here or pull back before resuming higher. So that MA90 is going to be a super important point to watch. And yesterday, you see that we keyed off of this previous close a few times. So it's really been a really muted range, though. If you look over the last 4 sessions or 3 sessions, really it's just been barely up, just very gently sloping upwards. Looks like we're going to open higher right into the MA90. So the open is going to be very, very critical. We're either going to break above that MA90 and then at some point pause, and then we would expect that to revert to the MA90 and test if the MA90 is going to hold. And if it doesn't, then we're going to pull downwards, and that is our expected case. If we pull downwards on the open, then we're going to look for areas where it might pause, and then we'll see where the market goes from there. It could start breaking down. If we're going to head towards the EMA 20, then we would expect it to break down. But given the muted range that we've had over the last few days, the consolidation is the stronger case, in which case we're just going to expect a muted range again today. And it really feels like it would be unusual for stocks to just break out and run just before the weekend. Now, we are not just before the weekend. Tomorrow would be just before the weekend, but we're pretty close to the weekend. Also, this weekend is Veterans Day. The stock market does not take Veterans Day off. Usually the bond market does, but since it's falling on Saturday, I'm not too sure. So let's see, bond market holidays. Let's see if they have Friday off. 2023, no. We do not get Veterans Day off in the bond market. They're used to having the Veterans Day off. Maybe that's why the market's been really quiet, even in the bonds. If we're quiet in bonds, then we're going to be quiet in equities. So in any case, there's nothing really here that's showing us that institutions are putting their money to work quite yet. And that is likely going to, if we don't get any action today, we're really unlikely to get any action on Friday, because institutional traders will really be positioning themselves for the weekend, which means that any activity that we see is likely going to be hedging activity. And if it's hedging activity, then there's going to be most likely a downward bias, because what are we hedging against? We're hedging against falls in the market. So we just really want to see what happens at the open here. It looks like we're pulling a tiny bit down away from that MA90. So if we, again, go up, we're going to see it look for weakness and pull back to the MA90. If we go down, then we're going to look for it to trade in a range. Or if it breaks down a lot, then we're going to anticipate that the S&P 500 is going to head towards that EMA 20. Let's get some lines on the chart here so we can see where the levels that we're going to be looking for. So this is a previous close. or very near a previous close. Okay, we're going to look at the post-market low, which had some activity over here, some consolidation over here. We're going to look at the previous intra-session low, and we're going to look at this consolidation area right here, which happens to be the previous day high, and of course that MA90 right here. So these are the lines that we're going to be looking at. So just to visually see what I was talking about, if we break out, we're going to look for a pause and a pullback, and then we would want to know if it goes up or if it goes down. Alternatively, we could come down and pause, something like this, throughout the day. And as long as we hold somewhere in this range throughout the day, it's going to be just fine. Even if we come all the way down to here at some point, that's going to just be a slightly larger trading range. Actually, it'd be the same trading range as yesterday. So it'd just still be a muted range. So this would be all completely normal for today. And then weakness would be if we went below this bottom purple line right here. For now, we're going to expect consolidation. So this middle red case is what we're going to anticipate. So you know what to look out for. Right now, I wouldn't be putting much capital to work, just like institutions are not putting much capital to work. If I'm going to put capital to work, it's going to be to the downside because we don't expect this to be sustainable. Right now, we're not looking at a pullback to the EMA 20, at least not for this week. But we do at least don't expect that there's a lot more room for this market to go higher. And that means if we do any trades, they're going to be sideways trades like an iron condor, or we're going to have very, very quick 1 or 2 day put positions. Okay, so we've got 17 minutes before the open of the market. We'll just keep an eye on that. Also, the other thing before I forget, Powell can introduce some volatility. So during the day, sometime around 11 o'clock, we're going to be very careful. Pause and just see what the market does at this point, especially, and I would categorize it as a range, 11 to 12, but 11 to 11:30 especially, because again, when he speaks, he's not going to just blurt out something that the market's going to react to all of a sudden right when he starts speaking. It's going to be something that he says through the length of his speech, and so it's not going to happen exactly at 11 o'clock if there's a market reaction. Okay, so have a wonderful day, everyone. I will see you in the aftermarket today, but for the most part, we're just going to anticipate another muted range trading day.